Hey, what's up, ladies and gentlemen? Welcome back to the XForceGlobal channel, back with another Bitcoin analysis. I know you guys love these videos, so I'm here to give my continued updates throughout the week as we gather more data within the charts. Today's analysis is a slight shift in focus, and we're geared towards the macro analysis and how we can fit in the larger time frame wave counts, as I do still believe we're on a larger wave 4. As you can see, when we're zoomed out, it really doesn't make any sense to be extreme outright bearish for the time being, but could really transition any moment. We'll see. But if we zoom out, how can we combine and narrow down the other technical indicators in combination with the Elliott wave theory? Well, the most compelling technical indicator that both the bulls and bears hate, I would have to say, is the 200 simple moving average, and that's where the most fight actually happens, and we're kind of in that zone right now as we speak. I do believe the 200 simple moving average, along with the 120 moving averages, are the most interesting ones to work with in terms of support and resistances. But when it comes to the daily chart, the 200 simple moving average has pretty much been the trendsetter in terms of the continuation of a bull or bear market, and I'll give my reasons on why. And then eventually becoming a transitional moving average, where the weekly moving average starts to give us a little bit of a better final prediction on terms of support and resistances. So you can see we have transitional movements here, and that's where the trend actually kind of defines the 200 moving average on the daily chart. So if we date back all the way from the beginning or the history of Bitcoin, 2015 in this chart for more example, but as you can see, the 200 moving average has acted as support all the way for 5 years from 2015 to 2018 or 20 or so. And then we had a major bounce on that, and then the bear market was vice versa of a type of a correction move where we saw the 200 moving acting as resistance, and then we saw a break above it, and then we saw that transitional move wave happen, and then we saw this happen where we didn't even retest the 200 moving average, but we did create a transitional wave movement that gave us ideas on whether this was going to be transitioning into a bear market or not, because thereafter we saw the 200 moving average become major resistance, and then that was the major trendsetter for the 2021 up until the 2023 bear market that happened. So this current stage that we're at right now, we are at a very critical stage because the 200 moving average is now being tested, and this is the first time we have tested it since 2023 of August of last year. Now, what's important is we broke above this back in the beginning of 2023, came back and retested that, and then retested it 2 times, and then it's small kind of a transitional wave we had here, most likely as the 1-2 or the 1-2-1-2. That is where the bull market has resumed. And that is why that was a good signal for us to kind of take into consideration for whether it was a good buy signal or not, just based on this super indicator alone. So will this be the continuation of the bull market, or will we kind of dip back below the 200 moving average and then continue up? There are 3 current counts that I'm seeing on the macro time frame that does help support that we are going to be supported by the 200 moving average, and then there's 1 count where I do believe that it's not going to be supported. So if we look at the current count, and if we take the assumption that the 200 moving average is going to be the most important moving average and support, we can see that I have this count as a 1, 2, 3, 4, 5. Now, we talked about this and we discussed the possible movements that we can have in this current range here in my previous video. So if you haven't seen my previous video, please go watch that. We had the idea of a possible triangle being created here. Now, this is the only mode of correction that I can currently see along with the diagonal. That is either going to be acting as immediate support for the diagonal idea or this triangle support idea, where we create now some kind of sideways movement where we see the flattening of this 200 moving average curve, and then we can see the 200 moving average acting really nicely with the triangle idea, where we come back up and then come back down and retest this one more time, and we are still kind of lagging for this 200 moving average. So what that means is we should see a flattening of this curve, meaning that it should eventually act as ultimate support. And then if this triangle idea does come to fruition, we should see this 5th wave move come out, and then that should be the end of all things. Now, in terms of the overall counts, we can infinitely adjust this overall macro count. Now, I have it as such because I just kind of like to fit in this intermediate degree as the overall wave count of a 5-wave move to the upside for this wave 3 primary degree, and just kind of say that we are working in an overall pretty good looking 5-way move to the upside. Now we can alternatively say that this is a flat, have this as the 1, 2, 3, 4, 5. Really doesn't matter, but I just kind of like to see this as the overall completed move for a wave 3. So what that means is, again, very simply put, we're working in a very consolidated range, and that's extremely healthy for a bull market. And now that's, of course, we can start transitioning into a bear market idea or some kind of temporary bearish selling pressure that could break this 200 moving average, just like we saw over here. That could bring us into a deeper C wave if this is a larger ABC. But for the time being, until that isn't broken, we still have to stick with the narrative, ladies and gentlemen. Now, we can make all the assumptions we want, but the major assumption that we have to make is ever since we were trading above these regions here, we always have assumed that these levels were going to be a buying interest for all the bulls, right? So why shift the narrative right now? There's really no major news or kind of predicament in terms of how we can combine that for a larger bearish move to the downside. So we should just stick with the overall narrative for the time being, and that is kind of my duty to do so and talk about what the possible patterns are. So this triangle idea, in my opinion, has a lot of merit in terms of the combination of that super indicator of the simple moving average of the 200 moving day average. So that's going to be a very important support level for the bulls to hold. Now, again, if this does kind of range, I expect the flattening of the curve and eventually retest it one more time. So I do believe we will be ranging if this triangle idea happens. This still gives an excellent overall look as an idealized 5-way move. Now, the keyword here is idealized. I use this keyword a lot because there's just either one way we can have high conviction, or we can just idealize every scenario and give out 50 different scenarios and then eventually be right on one scenario. But for me, I try to kind of mix the balance between conviction and high probability scenarios. So that's why this is the first highest probability scenario that I have in mind, because of the extremity of the waves that we're seeing in between here. And usually that is kind of indicative of the narrowed down pattern of the triangle idea. Now, this is not currently set in because it is pretty early for calling this triangle, because we only have the third subwave, and even if that is a subwave of a zigzag scenario. But again, it is what it is, and it'll be a little bit more kind of higher conviction in terms of the scenario that we can build on this idea once we build up this D wave here. So as long as we have this ABC idea and this as the ABC, we can still fit in a complex scenario. I mean, really, we can sit here all day and talk about what is the complex scenario or the complex wave count. I think too many people focus too much on the theory in itself, and it is a theory after all, so you have to kind of mix that balance between other indicators and see what the right look is insisting upon us. So to me, this right now, just keeping it simple is the most important thing here. So that's the first idea. Now, the second idea is based on the idea of a diagonal variation, the ending diagonal for more specific. If we look at this, it's utilizing the same idea. However, the termination of wave 4 has ended here. We're still utilizing this double zigzag scenario that we've been discussing. And the only way that I can currently fit this in is that we have this 5-way move up into wave A, triangle for B, and then a short wave C, just like we had for wave A, B, C here as my use case study. So there are many instances where we had a long wave A and a short wave C. So there's no problem in doing that as long as the overall macro structure is remaining intact. So what that means is if this is now becoming an immediate support and we just bounce out of here and we don't even come back and retest this even as a possible triangle, this idea seems a little bit more logical to me. Why? Because it still takes into consideration for both the bears and bulls. As we reach or approach new all-time high, I think we will get another rejection. And from there, the only way that I can idealize a scenario is a possible diagonal idea. Now, this idea has the best look, even against that triangle idea, because we do have the finished termination of a wave 4, and we're just still kind of predicting that this wave 5 is in play here. So this ending diagonal idea does kind of also overlap with a lot of bullish scenarios, but for now we don't want to be ultra bullish because we do have the possibility of saying that we have completed a wave 1, 2, where we are still assuming that this wave 1, 2, 3, 4 has completed. And then if we're still seeing this as a primary degree, we can say that we're still working in a deep 1, 2. and then we go for a higher 3-4, ultimately bringing us a bit higher in terms of targets. But to me, having an extended fifth wave at this current time is a little bit too early to predict, so I'd rather just be a little bit more safe in terms of risk reward management and have the overall look or idealized idea as a possible ending diagonal that can still bring us further down, because I am expecting a major rejection around 90 to 100K regions. Now, we did already get that major rejection around the 70K levels, so I do believe that another 30% run or 50% run from these levels specifically is that I think that we can still get a major rejection from these levels. And as a neutral analyst, I do think that once everyone is starting to turn really bullish from there, I think that we will get a major pullback from there as a sharp move, more specifically. So if that's the case, this immediate support of the 200 moving average works very well in tandem with the current count as well. So either that 1, 2, 3, 4, 5 as an impulse or a diagonal idea, it really doesn't matter. So this is the current second scenario that I also believe in terms of how this immediate support will work and also bring us back to all-time highs. Now, what if we break it? Because there's always the possibility of breaking, just like we did here. We didn't even retest it. We did get that immediate support of that first initial breakout. However, on that sideways movement, we did break below it. So what is the case here? We have the possibility of having a larger ABC. We have a deep ABC going into that interest zone that we haven't retested yet. That can still help us give a relatively overall good look against this idea of a sideways 1-2. And we can still say that we are creating a sharper wave 4 that'll bring us temporarily down below this 200 moving average, trade below it and above, try to create that first wave 1 just like we did over here, and then break it back above it and then continue that fifth wave, which will be ultimately more bullish, and we should see a higher fifth wave going into surpassing the 100K regions. So it's really about how you want to see this, taking the balance between alternations and so forth, how you want to label the internal wave counts here. But again, it doesn't really matter, because ultimately I still do believe that we're in a wave 4 of a larger degree of some sort before we start to really talk about bearish scenarios going into that fifth wave. And then we can start talking about how that major pullback will happen and see what kind of degree we may be in, because there are other bearish scenarios that we should be taking into consideration that I've discussed before. You know, we can be creating a truncation here. We can completed that as well because we had a major expectation to the upside, but we didn't. We created an orthodox top of some sort, and then this may be the beginning of an impulse wave. We just simply do not know. So with that in mind, since we do not know, we could be merely in a consolidation phase for a wave 4. We could be merely working in an immediate support and then work correctively to the upside, alternating between actionary and reactionary waves here. Or we could be working in a deeper C wave, which really doesn't have any too much of a merit in terms of losing too much, because we are only 18%. We did most of the work already. 20% move to the downside, right? We've done it twice. So one more move to the downside isn't really going to put a dent in people's wallets in terms of spot holders, because most of them are already holding here. If it does come into these regions, that's when you start to panic. But for the time being, this ABC also does have its merits in terms of creating a larger ABC against this sideways 1-2. So that's that. So I think those are the overall scenarios. And if we really kind of zoom in, again, I did discuss the possibility of that triangle being built and how would we create that triangle. Now, this triangle idea is, again, still a little bit far-fetched. However, I do think it is extremely valid in terms of how we can create it, because we do have an A, B, C going into that first subwave here. Now, originally I did have this as a W, X, Y, but again, I did talk about this possibly being the impulse in itself. And then I did talk about my use case study where we could have a long wave A and then a sideways wave B, a triangle, and then a C wave to complete it. So I think that we can be creating this as an ABC, ABC, ABC for wave C. And then we have room for creating a complex wave count for here, wave D. We have that room. We can always alternate between back and forth, whether this is going to be the, zigzag where we have a WXY. We can have this as a WXY alternatively. Really doesn't matter, ladies and gentlemen. It's just about how this starts to develop to this wave D. So in my opinion, I think this overall triangle count has the largest merit in terms of that support of that 200 moving average. So hopefully that was convincing in that sense. Or if it does get immediately supported, this idea has a better look in terms of the overall macro count. Again, we don't know because it's way too early for a diagonal to be created, but it does have the best look because wave 4 has terminated already, and we are just kind of simplifying things and saying that the wave 5 is in the making here. So we do have the idea of the WXY or ABC into wave 1, and you can have as many complex corrections or complex zigzags rather to the upside as we continue to the further to the upside. So that's that. And then we have the deeper one too, which is kind of a low probability, but still kind of in tandem and works with that diagonal scenario anyways. It just depends on whether this is going to be an impulse or a three-wave move. Really the same expectation to the upside anyways. It's just higher targets, and we can just readjust the counts as the price goes higher. So that's that. And then we do have that bearish idea where we have that A, and then we have this B wave, and now this is now turning into something that we just cannot simply count at the time of recording. It's quite difficult. Even with this move down, it's still consolidating, and it's trying to look like it's trying to create a range here one more time. The longer it ranges, it's going to be more difficult to create a wave 4 for that first beginning of the actionary wave. We had this problem numerous times as we started to come back down with each range here. That's the problem with these ranges. That's the biggest problem. So there's really no point in talking about how this current internal count is being created, because it can still have the best look for a possible 1, 2. And that's actually kind of the first beginning steps that we're looking for a possible diagonal or the beginning of the triangle idea. So just stick with everything in terms of the simplicity side. Right now, we are still working in a fashion of threes for the time being. If we're looking out on the macro perspective, again, that 200 moving average is going to be extremely important for us to be saving. And we do have a lot of merit for it to be safe, because if we are assuming that we are in a bull market, and for many of you have assumed that this was the beginning of a bull market, and a lot of bears have shifted to being a bull. So right now, I think this 200 moving average, whether we do come back down and retest it, or we kind of flatten it, or we come back down below it and then retest it just like we did over here, still think that we're in a larger wave for further continuation to the upside, for a larger bullish continuation. So hopefully that was helpful, ladies and gentlemen. Please subscribe. Please like the video if you haven't already. If you aren't in my XForce Discord membership, I do a lot of my timely updates in there as well. If you're not following me on social media at X, formerly known as Twitter, please do give me a follow there at XForceGlobal as well. Hopefully that was helpful, ladies and gentlemen. I'll see you guys in the next video with a new altcoin analysis. Thank you very much. Have a fantastic weekend. Bye-bye.